Nordstrom reported their second quarter earnings. Now, Nordstrom is the upscale department store chain. They beat Wall Street estimates, and they also reaffirmed their forecast for the fiscal year, even as revenue fell to $3.77 billion from $4.09 billion a year ago. Now, when I look at the monthly chart, I can see previous lows, but this is just reaction to what I'm calling monthly buyers down at the $12 level. And we're going to just denote that. At $12. Now, before we continue with analysis, let's look at this article. It is coming from Yahoo Finance. Nordstrom's results reflect cautious consumer spending, echoing department store sector blues. All right. Nordstrom on Thursday reported its sales and profits fell in its fiscal second quarter, joining its department store peers, coping with shoppers' cautious spending. Now, this is not the only thing that Nordstrom and other shoppers are coping with. Let's look at this quick video coming from CNBC. Now, this theft is called shrink or shrinkage on Wall Street, and it's costing retailers such as Nordstrom hundreds of thousands of dollars a quarter. Let's continue with the article. But the results still topped Wall Street expectations. Seattle-based upscale department store reaffirmed its financial annual outlook that calls for sales to decline for the year. Nordstrom sales were affected by the timing of the company's anniversary sale, with 1 week falling into the third quarter this year compared to 1 day in 2022. Moreover, last year's results included a full quarter of sales from its Canadian operations, which the company wound down in June of this year. Nordstrom said it expects the revenue decline between 4 and 6% for the year compared with a year ago. It also expects earnings per share of between $1.80 per share and $2.20 per share for the year, excluding charges related to wind down of its Canadian operations. Analysts expect $1.98 per share according to FactSet. Nordstrom executives told analysts on a conference call Thursday that the retailer has seen credit card delinquencies rise gradually and that they are now above pre-pandemic levels. So we've seen credit cards, mortgages, car notes, debt all above and reaching all-time highs. That could result in higher credit losses in the second half of the current fiscal year and into next year, the company said. Now, many have said that we're already in a recession, but many also forecast that we will be in a recession in 2024. All right, so let's continue with the analysis. And we're going to zoom back out. All right, you can see up above we had monthly buyers, sellers. This is at 40, we'll call it 47 even. And since price hit this level back in March of 2021, it's been in a steady decline. However, again, a couple more dollars below current price, I anticipate a bounce. All right, let's go to the weekly chart. and you can see how price rallied higher. So you know that there are buyers here because price came down, couldn't get down to the level, and rose roughly $10 before this leg down. This leg down, you can see on the daily chart, all of this is just range bound. So the momentum is to the downside right now. And this leg out from this zone was formed on pretty decent volume. All right, this is the daily chart, and on the news this morning, price did form a daily sellers level. However, this daily sellers level at say 1750, it's like a motorcycle compared to this monthly zone, which is like a 18-wheeler trailer truck. Meaning, here's the setup. Price comes down, get a bounce, get a bounce into the zone. This is going to be like a speed bump before potentially the zone getting breached. Daily sellers at 1750. So I'm expecting more downside risk, at least a couple more dollars, as price will be entering a major monthly buyers level, at which time I do anticipate price reversing. Thanks for watching. Subscribe. Please like the video.